I don't mind if you hate Bitcoin. If you short our stock, that just means you're buying it in reverse. Like you're going to short it now, but eventually you'll buy it later when I need you to buy it. And so what we did is we created an operating company, and we realized at some point now we're a Bitcoin development company.
Back in 2020, out of desperation to save his company, Michael Saylor, then CEO of Microstrategy, carefully looked at all of his investment options and saw Bitcoin as the logical place to invest the $500 million he had on his books. Fast forward to 2024, and Saylor is now worth $4.2 billion, in the top 1,000 wealthiest people on the planet according to Forbes, and Microstrategy has custody of over $35 billion worth of Bitcoin. In an interview with Digitracom, Saylor walked us through the stages of how Microstrategy went from acquiring Bitcoin out of desperation to it becoming an opportunity, and now it's their full-on strategy that differentiates them from the market. As Bitcoin trades in the $67,000 range, and MicroStrategy trades for about $1,300, a far cry from the $112 stock before Bitcoin, Saylor believes many companies will see the value in Bitcoin and try to emulate MicroStrategy. But it won't happen overnight. Saylor believes that we are still very early when it comes to adoption from public companies, sovereign funds, and the like. Saylor believes that his move with Bitcoin being the focal point of his balance sheet is a revolutionary move and the complete opposite of what is common knowledge in the business world. And because of his move away from stability and embracing volatility, he has opened up the opportunity for many players in the market to invest and interact with MicroStrategy. Saylor believes we are still early, and it's clear that Bitcoin is mainstream, adopted by the Wall Street crowd, and it's here to stay. But the opportunity for early adoption won't last forever. Let's listen to what Saylor has to say.
If you took a company public and you sold billions of dollars of securities to buy those buildings, the trick is, can you get the cheapest financing? A public company has cheaper financing than a private company because it's more trustworthy and transparent, right?
Yes.
You have to make thousands of pages of disclosures. You're bound by a lot more restrictions. So a public company in America is probably the most trustworthy of a corporate vehicle for issuing security and raising debt. So you would have an advantage if you were a public company and you were doing real estate development. But remember what I told you about volatility.
Yep.
The volatility of real estate's 20 or 15. You can't sell 100 vol equity and invest in 20 vol assets because at some point the volatility in your equity goes to 20. You see?
Exactly.
What we were doing is selling the 100 vol plus equity, and then we're buying a 75 vol asset, levering it up to make it back into a 100 vol asset. So if you're actually creating a volatile balance sheet that will drive a volatile stock, that creates the options market, and that creates the opportunity to raise money for less than 1% interest unsecured. Now, that is unique to Bitcoin. Maybe it's the first time in the history of Wall Street, you have a property asset or a commodity asset that is appreciating because it's hard cap 21 million, right? It's a scarcity.
Yes, exactly.
So it's appreciating and it's volatile. And most people in corporate finance are taught to avoid volatility. They're taught that volatility is a bad thing. So they get rid of all their capital. And if they invest money, if you had $1 billion on your balance sheet, you wouldn't buy something volatile. You would buy treasury bills. But treasury bills are volatility 5. Like they're the least volatile thing you can possibly buy. Okay, so how do you arbitrage that? And so you think about a big company. A big company, it's run to have visibility for the next 3 years. I give you guidance for the next 3 years. I want to know what I'm going to make a year from now. I tell everybody, and then I have no capital on the balance sheet that's volatile. So there's nothing that's going to move, and I consider that success. But if I know what's going to happen for the next 12 months, why would I trade the stock every day? I can just make a decision once a year. So the result is MicroStrategy stock trades more than all these big large cap companies, right? We end up, because, you know, McDonald's and Coca-Cola and Nike and Walmart and Pfizer, they're all very predictable.
Yeah.
And predictable is good for people that are afraid of the future. But predictable is awful for the options market and it's awful for traders. So in this particular case, what we've done, it represents a lot of different paradigm shifts. First of all, it's based on Bitcoin, which is a paradigm shift. It's a digital commodity instead of a physical commodity. That's a big idea. $1 billion of digital energy instead of $1 billion of oil. The second big idea is Bitcoin does one better. It turns the commodity into a scarcity. It's the only commodity in the world that's got a cap of 21 million. Every other commodity like soybeans or oil or natural gas or gold is infinitely producible. So there's a lot of price supply elasticity.
Exactly.
That's why it doesn't make sense to buy billions of dollars of oil and hold it for 10 years. That's why we don't use oil as a treasury reserve asset, because there's too much of it. So Bitcoin is a scarcity. That's the second revolution. The third revolution is using Bitcoin as a treasury reserve asset instead of sovereign debt, instead of treasury bills. Well, treasury bills have an effective after-tax yield of 3%. The cost of capital of a company is probably 12% if you basically take the monetary inflation rate and add in 4% for a risk premium. So if your cost of capital is 12% and you're investing at 3%, you're losing 9% of your capital every year. Well, Bitcoin's been appreciating at 20 to 50%. So we're not doing a third or a quarter of the cost of capital. We're doing double to triple to quadruple. So if you have a treasury asset which beats the cost of capital, then it's not dilutive to carry the money. It's accretive. Like the conventional wisdom is when you sell stock, you dilute the shareholders. But in our case, the more stock we issue or the more money we raise, the more we accrete. And so hundreds of thousands of companies have assets on their balance sheet which are dilutive. And Bitcoin is the first major asset which is accretive. So we turn the entire treasury strategy upside down by actually accreting assets. Today we have $15 billion of Bitcoin on the balance sheet. And the operating company generates $75 million a year in cash flow. And the operating revenues are $500 million. So we made the balance sheet the primary part of the company instead of the P&L. Everybody else wants the balance sheet to go to zero or negative, and they want the P&L to be the primary part of the company. When we did that, the volatility of the stock went through the roof, because if Bitcoin goes up and down $2,000 and we have 214,000 Bitcoin, then what happens is there's $1 billion swing over the weekend. And if there's $1 billion swing in the balance sheet, that's the same as 15 years of lost earnings. So imagine the company said, we're not going to make any money for 15 years, but yesterday we told you we would.
Yeah.
And then the company the next day says, oh, we were wrong. We're going to make the same amount of money for the next 15 years. Okay. In a normal company, the investors lose faith in the management team and they dump the stock. But in our case, the business model is still good. The management team is still good. Just the traders think, okay, I got to trade the stock. I got to trade the equity. So the way to think of it is I'm putting a crypto oscillator in the middle of the balance sheet. It's a crypto engine, right? And the entire crypto economy is driving volatility, and the volatility is driving the equity, and the equity is driving the options, and the options are driving the arbitrageurs, which then are willing to give us billions of dollars of capital for, unsecured, no interest. It's like risk-free, interest-free capital, which then we can invest back in the company to the benefit of the shareholders. That, to my knowledge, I can't think of another time when that popped up. And you can see if I tried to do that with gold, it wouldn't work. If I tried to do it with the S&P index, it wouldn't work, either because the volatility doesn't work or because there are all sorts of other restrictions. So we were granted an opportunity with Bitcoin. We started out of desperation. It became defensive. At one point, I hoped I'd have 500 million of Bitcoin. And then it became opportunistic. Maybe we get a few billion. Then it became strategic. And then we realized that, our real opportunity is to securitize Bitcoin, and we're meeting the needs of a dozen different classes of investors. They would like to invest in Bitcoin, but they can't buy the commodity. They can't buy the ETF. They can't buy equity. They have to buy the option. They have to buy the debt. So we give them what they need, and we're a bridge between traditional, conventional finance and the crypto economy. The 20th century was built on credit. The 19th century is built on gold. It used to be,
exactly.
The story was Spanish sent gold across the ocean, and if your ship sunk, you lose the capital. It's a big problem.
Exactly.
If the ship gets washed into a shore, you lose the capital. It's very slow. It takes 6 months or a year to move the capital. So eventually, with the telegraph, we decided we were going to move the capital via credit, a bank check, or some bank draft. And that worked in the 20th century. But the problem with credit is very expensive, very fragile, very risky. If I wanted to move $1 million 40 times on a credit network, it takes about a month to settle each time, and it's a 2% fee. And so if I do a credit card transaction 1 million times, it'll take 4 years, and the banks will have all the $1 million as fees. And so the money doesn't move on a credit network very effectively. It is slow. It is expensive. What you want is a money network where you can move the money 40 times in 1 minute for a penny. No settlement risk. And what Bitcoin offers is it offers that much more industrial strength settlement network, and the layers above it, the layers 2 and the layer 3, will just allow you to move money at the speed of light, friction-free. Anybody can open a bank. Anybody can start a bank or an exchange anywhere in the world on the weekend, writing to the Bitcoin protocol without asking permission to anybody else. And nobody anywhere in the world can open up a company that will integrate with the proprietary systems of the 20th century. You could have 20 years and 1,000 lawyers, and you still wouldn't be able to plug into one of those systems if someone doesn't like you.
To watch the full interview, check out the link in the description. What do you think of Saylor's thoughts here? When do you see all the big corporations jumping into Bitcoin? Leave a comment. If you found value in the content, hit the like button, as that greatly helps the channel find similar viewers like you. If you're new to the channel, hit the subscribe button to stay up to date on the news and commentary in the crypto market. Thanks for watching, and we'll see you on the next one.